Derived Trader Academy. Today we are going to do analysis on Volatility 101S. Yeah, this is a volatility index, and as I told you in the earlier videos, I told you volatility indices, they are good to trade. They are very easy. They follow technical analysis 100%, no news. You don't have breaks on weekends, and they are very volatile. So today I'm going to take you through analysis of Volatility 101S using the top-down analysis, so that you can be able to know the direction, whether to trade and where to enter, and of course where to come out when we have entered our trade. So basically, top-down analysis, we are going to start from the daily time frame, so that we can be able to know the larger movement of the trade. And from where we can see, using the crosshair for explanation, I'm going to take you through how we draw it and how we analyze it. So from what we can see here, for the crosshair, from here we can see this market, it formed a double bottom. This is a double bottom. This is one side and another side. So these are double bottom. And from here, the market started forming lower highs. This is a lower high. This is a lower high. This is a lower high. And from here, we can see a higher high. Then the market formed a higher low, then a higher high. So from this higher high and this higher high, it tells you that this market initially it was moving up on a larger time frame, that is daily time frame. But when we try to zoom in, we can see from here, this is another double bottom. Okay, this double bottom tells you that this market wanted to come down, but again there was a much pressure here, because when you're analyzing these charts, when you're analyzing this movement of the market, when you see a double bottom, it's not just a double bottom by name. You should understand what does it mean, a double bottom or a double top or a head and shoulder. It tells you here there was a lot of pressure that this trade could not go beyond here, so the market was moved up. So from here we can see the market again formed high highs, another high high. From here we have a higher low, a higher low, a higher low, and then from here we can see this higher low. Maybe it was supposed to be a higher, another higher low here, but this market was broken, or this trend was broken. So let's draw and see how this market has been moving. We can use trend line. We are trading this using our phone. If you have a PC, it's good, and a phone is also good to go. So let's use the trend line, and from here we shall draw our trend line from here, because we want to see the current movement of this trade. So let's draw it clearly. That's how we normally draw our trend line. Yes, let me just extend it a bit so that it can be visible. So let me explain something here, so that we can go further to our in-depth analysis. So from here, this is a support, this is another support, this is another support. But from here we can see the market has been moving up, 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 and maybe from here the market was supposed to move up, but from what we can see here, the market got broken, or rather the trend got broken, and it was retested. Let me just zoom it out so that you can see how the market was broken. So you see the market from here. So you can see here we have this is a pin bar candlestick pattern, a pin bar which confirms that the market will move up. But again, the pin bar was invalidated by a breakout. So from this breakout, we are seeing a retest of these three candlesticks. Maybe this can be the three black soldiers and all that, but the moment you see these candlesticks, the three candlesticks, the green ones, it tells you this market was retesting to this trend line, and from there we can see the market started moving down. We are seeing another retest of this support initially, which was here. So it tells you that this market now, it has changed its movement. Now it is no longer in an uptrend. As we can see, it was moving up, 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 because I told you volatility indices follows technical analysis at 100%. So if you see this breakout, like we normally have in forex market, if you see this breakout, it tells you this market now started moving down. But again, let's go further and draw the trend line to see now, because now we have seen the market is going down. We should look for a trend line that will connect these higher lows, and another higher low here, another lower low, another lower low, to see the nature of this trade. to see whether it is moving up, moving down, or whether maybe from where it is, it has reached a point of selling, or we should wait further for the market to reach somewhere here or continue going down. So let's go to our trend line. Yes, we can go to our trend line again. So we are connecting from here, from this point. Follow clearly. We are connecting this higher high to this higher low and going further down. So do not force the trade, do not force the drawing. We just draw it clearly without forcing it, so that if you try to force a trade, then you will be sure you make the wrong judgment. So these things, they are very easy to draw. You see, don't need to overcomplicate your analysis by using a lot of indicators and all that kind of trend lines. They have been proven to work the best actually from all other analysis. So from what we can see there, so the market has been moving from here, it touched here. So what do we expect? Because it has not touched this point, which is almost touching, the market should touch here and then we go further down. We can see here we have a resistance here, and again this resistance is resisted here. So we expect, because this market has formed a double bottom here, we expect this market to touch something here, or rather in this trend line, so it to continue moving down. We'll go this to the shorter time frame to see how we are going to expect or that to wait for this market to reach here so that we can have a sell. So to make the right judgment, or to know whether the trade is continuing further down, we should draw a down trend line so that we can be able to trace its movement. So let's use this candlestick. Sorry, let's use this one. Trend line, sorry, I'm using this candlestick. So let's use that trend line. You see, that's a very perfect movement. So let me just explain something. So from here, the market came down, touched here, it continued further to touch the trend line, continued further to touch this trend line, confirmed it again, and then the market is moving in a range, probably reaching to this trend line. You see how simple it is to do trend line, because trend line, they are easy to do. They can be able to project the market even without using any indicator. So by using this channel, because this is a channel that we are now the market is following, you can be able to project after the market moves, touches here. Where are we expecting to come out? Maybe if we were taking our take profit, we will take profit from this point. So because we are a trend follower, I told you it's good to be a trend follower. Always follow the trend, because the trend is always your friend. So from here, you see the market moved up here. So you cannot buy in a downtrend. You just wait for the market to touch here, because it can give you a further chance for you to continue selling. So we can sell here, we sell here. Maybe you can take your take profit from this support. Maybe there are some who took their profit from here, but you see the market continued to move further down because it had not touched the trend line. So once you maybe see this market reversing, you use a trend line to draw from this point to this point, and it continues further down. So these 2 points, they can be able to help you to project the further movement of the market. So we can see now from this down trend line, the market touched here, another touch, and definitely we are expecting this market to move further down, because once the market the trend line gets broken, or the trend gets broken, the market tends to go back to where it started. So from here, maybe the market will touch this point and further come down to this point. So we can expect our take profit to be around this place, around this support, previous support that it was broken. So let's go further and try to engage it, and let's go to our 4 so that we can be able to see the movement of this market. We can try to zoom in and see. So our 4 is now telling us how the market is going. Clearly we can see from this point the market has been moving up, down. Let's continue. Now this market is moving almost here. The moment this market touches here, it will move further down. So it's not advisable at this point to make any buy or to make any sell. But this is a very, very powerful analysis, or a powerful trade that can earn you a lot of money, because you see, you just wait, you just put this trade in a checklist, and the moment this trend touches, or this market touches here, it will give you a very good edge. Let me just use Cruzeso for a better explanation. The moment this market or this trade reaches here, you can make as many trades as possible, because you can wait for this market maybe say for 2 or 3 days. By the moment it reaches here, you can be sure that this trade is going to materialize. Let's see, for example, we can see here we have a resistance. So when you want to expect, or rather to wait for this market, it's good for you to draw the place where you're expecting the market to reverse from. So we can use a rectangle and try to draw the area of value. You can see, let me just draw it well. The area of value is where the market we are expecting it to reverse from. So an area of value is not just a single spot, it's an area. As we can see, it's not one spot or one line, it's an area. We say that this market probably it will reverse from this point. So we are touching all the resistances, and from what we can see, this market has been touching this support previously. It touched it again, and we are expecting probably from here, because we are here, we have a trend line and we have the area of value. So it tells you this market probably, because it's about projections, this market, because here we have a support, and from this support the market is moving up. So previously I had told you about the continuation and the reversal patterns, and from what we can see, this is a flag pattern. Let me just use trend line to draw this flag so that you can be able to see it well. Allow me to, or rather we can delete this and use a rectangle pattern. So I told you a flag is just a flag. The way you normally draw a flag, that's the same way we normally draw here. So a flag is a continuation pattern. So from here, this market, because it has been moving down, I told you the market normally trends 30% and ranges 70%. Every market, either forex or volatility indices. So this market has been trending, you see, up, down, continuation. This is a very clean movement, and from here the market started ranging. But the market, when the market is ranging, it doesn't now tell you that it's reversing. You should know if the market initially from here, the market is in a downtrend. So when you see such a movement, when you see such a pattern like a flag pattern, it should give you an opportunity to know that this market will go further down. So it gives you an opportunity. If maybe this market reaches here and you have been selling from all along from here, it tells you this market will continue going further down. So it's another opportunity for you to add your sell. So as we can see, this is a flag pattern, and a flag pattern from the initial classes that we had gone before, it tells you this is a continuation pattern. So when you see this pattern appearing anywhere, either in an uptrend or a downtrend, it is a continuation pattern. Not very clearly, because this pattern appears many times and people tend to buy from here and they want the market to break from here, but this is a continuation pattern. So from our 4 time frame, we can be able to understand that this market is not going down, and as much as here the market is trying to come down, but it will eventually come to this point, because it must have a touch. This is through experience. I've understood that this flag pattern normally have 3 touches before it comes down. So this is a first touch, another touch, and another touch. From here we have a first touch, second touch, which has been retested because the market never went up to here, and we're expecting a third touch, a breakout, a retest, and the market continues going further down. So from what we can see here, we will wait for this flag pattern, for this trade to reach here, and from here we can go further down. So if you are an aggressive trader, you can maybe wait for this market. You buy here and you come out of this market from here. But I will not advocate for you to be so aggressive, because as a professional trader, you should wait for this market to appear clearly so that you cannot make a mistake. Because you see, if maybe you had bought here, that's why it's good to go for a trend. Do not go against. Maybe if you bought here and waited for this market to reach this point, you see the market went further down, and maybe if your stop loss was somewhere here, maybe it could have been taken out. But it's good when the market reaches here, because we're so sure this market will go further down. We just wait, we hold our peace, we put this trade in a checklist. The moment it touches here, we can go further down. So I hope that is well explained. From there, let's now go further to our one for us to confirm down the current movement of the market. And from our one, we can be able to draw. Here we normally draw trend line as many times as possible because this is the only analysis that we can be sure of. From there we can draw that trend line. Yes, allow me to expand it a bit. Let me just expand it. Yeah, hope you are seeing it clearly. Right, so from what we can see, this market is following this trend line. So a first touch, you can see another touch. So from here we expect the market to move further up. Can we use another trend line in the upper side? Because this market will always follow a channel. Let's see. Let's see how it's moving. Right, you can see the market will follow that channel. So from what you can see, if you understand this continuation pattern, it will tell you this is a pennant. You see, from here the market came down, moved up, moved down. Definitely it will move up to this point. And you see, that's why it's good to combine different time frames. Do not trade maybe daily and you see it moving down and you think the market is reversing. But the moment you go lower to lower time frames, the market, you're able to understand, is the market really moving down? Is the market really right for me to enter this trade? Because from here, maybe you can think the market is moving up. But the moment you have this upper trend line, this is a daily trend line that we had drawn before, and an hour 4 time frame and a daily time frame. It tells you when the market reaches here, this market will be rejected because it will reach this area of value. We saw this area of value from the resistance that we have in the hour 4 time frame. So from here, we expect this market to move. It can maybe reach here or touch here, then move up to this point, break this trend line, do a retest, and then continue coming further down. So from this pattern, we can say this is a pennant and it's a continuation pattern. It's good to know the reversal pattern and continuation pattern because in conjunction together with the candlesticks patterns and together with the trend line analysis and maybe large quarter, for those who understand how to trade, I'll be teaching us about how to identify the large quarters, their reversal and continuation time frames. You're able to know the direction of this market. So from here, this market has been moving up, another touch, which definitely it will move further up because it is following this channel. So this channel, it will help you to know when will this market break out of this channel now and retest it to continue moving further down. So if you've been in this trade, when you see the market moving in this direction, you not panic. You wait for the market to reach here so that you can continue selling more. That's why you can maximize on one trade. You don't have to trade 5 trades a day. The moment you have this trade moving up to this point, you sell several trades here. You will be able to make profit even when the market reaches, for example, it reaches somewhere here. This market will have made you so much profit than trading 5 trades that you're not so certain. So it's good just to take one trade, be certain about its movement, and from there you can be able to maximize on it. So from this channel, we can be able to see when the market reaches here, it will come further down, and if it doesn't happen, so it will help you to know if it will make a breakout. So if you've been in a sell, the moment this market breaks this trend line, you will be able to come out and maybe make a sell because the market does not trend all the time. It ranges and sometimes it moves on trend. So basically that's how we normally analyze this trade. This is volatility 100 1S, and from our checklist we can put this trade on watch list, expecting it to make a good sell. As we can see initially, just to recap on what we have said, the market, we start analyzing from this point. We see the market started moving up. It was the trend line was broken. The market retested again, and then it formed this to be a very strong resistance. And from here, expanding it further, we can see, let's go now to our first chart. You can be able to see it clearly using top-down analysis. So it formed a resistance here, another resistance. So it made this an area of value. An area of value basically is a place where most trades are taken most trades are closed in. So we are seeing, because it is touched here, another touch, another touch, another touch. Therefore, this qualifies this to be called an area of value, similar to this point here. You can see, let me just expand it further. We can see from here, this is a support, another support, another support. This makes it to be an area of value where most trades are taken, or most trades they are closed. So from what we have seen previously, this market has been moving down, but again it forms an area of value, which this is a rectangle or a flag pattern, which is a continuation pattern. So when we see the market moving up, in as much as we are in a sell, we will not panic and say, oh, this market is now changing the trend, it is moving up. No, this is just a breather pattern, which the market will breathe a little and then continue going further down. I hope you've gotten how we are drawing. We are made it so you can continue further to 15, where we normally have a good clear view. You can be able to trace it using a smaller time frame, because a smaller time frame is good it's easier to understand, and especially when you want to learn the candlestick patterns. And from here we can see a small double bottom. We can see the movement, another double top here, the movement of this market. So we can trace the movement of this market using a raw time frame. Do not follow the especially the chart patterns, maybe the pennant, the rectangle, the cup and handle. You normally trace them especially using the shorter time frame. So basically that's what we do from when we're analyzing these volatility indices. So it is a downtrend, and we're waiting for it to materialize. From where we can see, if it reaches here, we'll be able to make a good sell and put our stop loss. For example, if you sell here, we put our stop loss somewhere here and ensure that we take this profit to this point. So from here, for example, if we put our stop loss somewhere here and sell up to this point, there is more than a 1:5 reward ratio. Therefore, this makes this trade to be so good to wait for it. Put it in your checklist. If you're trading volatility 100 1s, put it in your checklist, and when it comes to this point, then you can be able to make a good sell. So that's for today. If you have not subscribed to our channel, I will urge you to subscribe. If you don't have the DERIV standard account, I would urge you to open one, because you'll be able to trade volatility indices together with the currency market. Like I told you before, this is the volatility indices market, and we have the currency. So you can be able to trade both at the same time, concurrently. On weekdays, you can maximize on the currencies, and on weekends, maybe you don't have, you never made something from currency, you can be able to make something from the volatility indices. So I invite you to open the DERIV standard account so that you can maximize on your profitability. So thank you for today. See you in the next one. Please ensure you subscribe, and we'll be able to update you every time we drop another video. Thank you for today.